Gents, happy Friday. It seems I missed the memo because you guys are both rocking some pretty sick hats this morning. TKO, that speaks for itself. Kyle's got the human dad hat, and I'm just, it's high school football season, number 2 in the country this year to start the year. Bishop Gorman. So shout out to the guys in Vegas, but exciting one, guys. We have our first friend of the pod, Kyle Israel's joining us.
Kyle,
so welcome, Kyle.
Thanks for having me, guys. Appreciate it. Nothing better I'd want to be doing at 5 o'clock on a Friday afternoon to wrap up the week. This is a nice way to walk into the weekend, is talk to 2 friends about sports.
Dom and Kyle, I know you guys talk nearly every day. Kyle, you were nice enough to come on the pod back, was that last fall, I want to say? And then we reconnected again in Arizona at the PAC conference in April. So we were happy to immediately, you were the top of our list. We needed a friend of the pod to drop in this week. So again, thank you for doing it.
I don't take it lightly. Seriously. Thanks for having me.
Kyle, we're for our base here, where are you calling in from? 5 p.m. on a Friday. It's 7:30 over here in San Diego. So there's quite the distance between us. AM. Yes.
This is a dynamic that is part of our working relationship on a daily basis. I have 6 hours and 9 hours blocked respectfully in my mind. 9 hours to know what's going on in your world. I'm in Berlin, Germany on a what feels like beautiful fall football afternoon. You know those Friday afternoons or Saturday afternoons where college football is in the air and it just like you can feel it? That's how this afternoon is today. So I enjoyed riding my bike a little bit and getting outside. Berlin is showing off today.
Very nice.
Very, very nice. Well, thanks, Kyle, for making the time. We know it's a very focused point in your career, and hopefully more to share about here in the future. But I think the big news this week, Brent, that we were taking a look at is the Lakers transaction. The Lakers selling for, I believe, $12 billion to Josh Kushner, Bob Iger, and it's funny because rarely does anyone in my world care about what I do. And I know that's a funny thing to say, but I actually went to a neighbor's house last night for dinner, and my neighbor Gary was talking about the transaction, and his wife Jen said something really funny at one point when we were talking about Josh Kushner, who's involved, and the brother of Jared Kushner, and the Trump ties there that we can get to. But I was like, well, Jen, like, why the funny face? And she proceeds to show me the following. We'll have to put it up for those that are listening on the live video stream. But we are clearly dealing with a different type of investor here. This is Josh Kushner's Instagram, and there's a lot of really nothing to learn about the guy here other than that he's quite the aesthetic taste for life, but kind of funny in the sense that like, this guy just bought the Lakers, had the leading bid supposedly in Vegas for a while, but just really interesting. I feel like we're ushering in this new type of investor into sports, and it's an exciting time. So, Brent, I don't know if you had any initial thoughts about the deal, but certainly interesting to say the least.
Yeah, I have a lot of thoughts. I mean, a quick one right off the bat is that months ago, I wrote this quick newsletter that I titled Visceral Capital. And the focal point of that piece was Thrive announcing Thrive Eternal, which for people who don't know, just to give the quick flyover, Josh Kushner is one of the best, if not like the best young venture and growth stage investor like on earth. Their portfolio is based on what they would call concentration and conviction. Huge positions in absolute tier 1 quality businesses. Databricks, Wiz, OpenAI, massive position in OpenAI, Stripe, Anduril, it goes on and on and on. And early, you were just pulling up his Instagram. In his first fund, he was in Instagram, Warby Parker. He had all of these hits in like the early 2010s as a young 20s investor. There was a long piece in Colossus magazine all about Josh that is worth a read for anyone who really wants to go deep. It's an amazing profile that Jeremy Stern put together. And what you take away from it is that he likes to fly under the radar, certainly compared to, his sister-in-law, Ivanka, and his brother, Jared, which they have no choice. You said tasteful in terms of his aesthetic. I think that's a big part of what he would how he would describe himself. Really strong and curated taste over the years. And he seems to be just beloved by the founders that he backs. But that piece, Visceral Capital, was on the heels of his announcement of Thrive Eternal, which is a new vehicle that seemingly is investing in things that are so different from his bleeding edge tech companies. And the whole thing is that they're looking for durable businesses with long-time brand equity and IP moats that are not disruptible, and that should really be the anti-AI kind of counter to a lot of the stuff in the Thrive Capital portfolio. So their first announcement, the first investment that they announced was a $100 million piece of the San Francisco Giants. They then, as we talked about on last week's Clubhouse, Josh and Thrive Eternal adjacent, they were the ones making the push for the FIFA deal that has since totally imploded. Bob Iger and Josh were among the bidders for the Las Vegas expansion team. And again, I'll pause, but it's not that surprising. And at the same time, it's so impressive how quickly he has said, we have this different vehicle. We have a different set of investments that we're looking for this. Fast forward 3 months and he's going to buy the Lakers. It's kind of mind-blowing how quickly and aggressively and efficiently he's been able to move with this new kind of thesis.
Well, I think you captured it there at the end. The efficiency of movement here it's bonkers to me. I saw the photo, or I was reading an article yesterday about the transaction more on the Lakers. And there's a photo of him and Bob Iger and Adam Silver at I think Wimbledon or something. And I just want to pick Kyle's mind on this. Like, this guy is moving incredibly quickly in terms of PR and headlines, but how long do you think some of these deals and perhaps the build up to them, going live for the world to see have taken? I mean, you don't just acquire the Lakers, overnight, especially consider that the guy they're buying it from bought it a year earlier. So were there already talks then? I'm always curious as to how these processes come to be on such monster transactions.
Well, it's a great question. I think the first thing that comes to mind is they have the benefit of a transaction happening a year ago. And therefore, there was a lot of information that was aggregated. There was some level of process that was already run on the deal based on the information or relationships or back channeling that they have. Number one, were they in the mix or in the conversation during that? Would be an interesting element to know. Number two, just generally, these transactions take much, much longer than most people anticipate. Just as a random benchmark, the average M&A deal, across all businesses takes 253 days on average from start to close. And that could be a $2 million transaction and kind of the same timeline for something much larger. At the same time, when you're talking about people that are of this caliber and have this much access and resources, both derived from themselves and quite easily from the people around them at this stage, you can move quick. And you have resources that allow you to get up to speed quite quickly. So I think that is an interesting consideration, is how long have they been processing this and thinking about it? I think it continues to illustrate co-invest type of syndication showing up more and more, less the individual family or the individual, but I think you will see. It's interesting, as you were talking about the aesthetics, Dom, I was thinking about Bob Iger and his, obviously, Disney experience, who have a very particular approach to everything that they signal and message. So there has to be some underlying, subconscious connection between how those guys see the world and how they process the world. But I think the deal, I think they have the benefit of having a lot of information from the recent transaction that benefited them here. I think the caliber of people allowed them to move quickly if that's what was required. And I think it's an illustration of kind of the co-invest environment that we're going to continue to see going forward, where there may be partnerships between groups of people that would have never been salient to anybody prior to it hitting the headline.
Yeah, and it's worth pointing out, in 2023, the very beginning of 2023, so almost 4 years ago, Kushner sold a 3.3% stake in Thrive Capital to Bob Iger, Mukesh Ambani, the Reliant Industries billionaire from India, and Henry Kravitz from KKR. So like these things and these relationships had to have been deep for them to have even made that move. And that was nearly 4 years ago. I've also learned that I think this Thrive Eternal vehicle is being run in a somewhat hands-on way by Bob Iger. Like this is not a casual advisor across the country. Like I think this is what he wants to focus on, clearly. But yeah, I mean the personal networks that these guys have, the access to capital, your exact point, their personal capital, their capital set up through this new vehicle is absolutely top notch. Dom, you had a great breakdown on Instagram, but there's a lot more to this story when it comes to Mark Walter and this investigation. And it sounds like things might be worse than initially reported. And my thought was Kushner, who is this apparently very friendly, under the radar, thoughtful, quiet, generally guy, smelled some blood in the water and like a shark. The second he saw his window to strike was like, wait a second. Why am I in this bidding war with, by the way, people like Bill Foley, Magic Johnson, like the other groups who were bidding for this potential Vegas expansion deal were pretty formidable on their own. And Kushner famously says, particularly when it comes to the later stage investments they do at Thrive Capital, they have a mantra, which is just buy Fifth Avenue, where it's worth paying a premium for the differentiated category leader. Like we've talked about on the show before, like disproportionate gains accrue to the leader in the category. And when you know that you can have the access, number one, and that you have the massive pool of capital to make a super high conviction and ultimately for your portfolio, as a portion of your portfolio, a highly concentrated bet, that's how they've ended up with these monster positions in companies like Stripe and Databricks and OpenAI. And so it just wasn't that surprising knowing how they look at the world that the second they get the tiniest, the door creaks open this much to get the premier franchise in the NBA, they pounced on it.
I agree with that. In my second question, and what I find interesting in a lot of these transactions and deals is what are the expectations for the investors? What are they looking at beyond the core asset that they're investing in? How are they going to be leveraging that in other entrepreneurial ways? And the reason that I ask that question is, do you think in the next 10 years, based on the way that the world is going, and you guys see it different than I do, that the Lakers are going to be worth $24 billion? Is the goal here hitting some multiple? I really be interested into the cap table that will ultimately be formed here. Is that largely these two firms? Is that Bob and his balance sheet capital and Jared's fund? Or is there 30 or 40% of the capital stack that has a different expectation of when their money will come back to them that may not be fully aligned with the core reason that Bob and him may be acquiring it? That's all speculation, obviously, from me. But for example, I was a part of a transaction into Major League Baseball last year, and we were constantly trying to process our buy price. And based on that buy price, if we had a fiduciary responsibility to return capital to our syndication, what are we ultimately looking to achieve? And how do we hit some of the core metrics that LP investors who don't have a voice, are counting us on as managers to obtain or accomplish? So when you start to get to the 12 billion number in that world, I'm very fascinated in understanding what is the Lakers a piece of the pie of from a strategic perspective, and what is the expectation of how you exit this, in the future. Now, $2 billion for the prior guy, despite his legal circumstance, is a pretty good investment from a 12-month return perspective at that scale. But I think that's very interesting to try to process. If they do have a sale in the future, does that matter to them?
So when you're going into a deal with Josh Kushner or Bob Iger in this case, what kind of economic wrapper or what kind of, investment specifics can you expect being an LP into a deal like the Lakers or something along those lines from either a distribution or fee standpoint? Do guys like that, demand, or can they command a certain wrapper that others can't?
If you just back in from the standard typical SPV structure, let's assume that it's some individual vehicle here of 2 and 20. I would, as an LP, would be asking the question that I just asked: what's your long-term goal here? Like, do you have a return orientation that matches my expectation for placing a $50 million or $100 million non-meaningful, as passive as it gets? I'm still buying season tickets on my own to games. Like, if I'm not getting, like, first of all, what do I get for that? Just generally. And number two, like, I think that those guys can basically structure the economic wrapper that they want, and find people to participate behind it. So, a lot of people like the idea that, hey, if I have $100 million that I want to put into something, well, it feels like the Lakers or a Big Four sports property are a very safe place to put that capital. The likelihood of it going backwards in value is probably much lower than another place I could place that capital. It's interesting at this scale. To see how these are structured. I think there's league dependency on what's actually possible. Like in the transaction last year with MLB, you had to be very careful around how you were structuring. Really couldn't be a management fee, profit interest pool on the backside rather than carry or promote. So I think it is league dependent to an extent of what's allowed. But I think those guys could get 2 and 20 all day if you just want to back into the standard. But I do think that the scale of these deals plays a role. And I think in deals like that, you probably see less ultra high net worth and family office and more institutional capital, where somebody is managing a large swath of capital, whether that be a pension fund, an insurance fund. Those become great capital partners at that type of scale when the asset can be fairly underwritten in a way that shows that it's not going to zero. So a couple of different ways to take that, but in general, those guys at this stage in their careers can probably command whatever they want and have people backing them.
You talked about distributions, Dom. The little bit that I know about some of these pro franchise transactions, minority or majority, a lot of what gets discussed are that the marquee teams in the best markets, take the Yankees, for example, I think have famously never had a capital call to their LP base in their history or in the last many, many, many decades, whereas other franchises cannot say the same. So you have a totally different expectation tied to the team that you're coming in. And of course, that's going to determine price and everything else. But I would think that in the case of the Lakers, you are likely not getting capital called because you are such a historic brand in such a giant market. That's speculation, though. But
I think
it changes the expectation.
I think they have to naturally think that they can drive significant revenue on top of what the Lakers are doing, right? Like, to an extent, they may be happy with the status quo, but individuals who have operated, in Bob's case, companies of that scale are always looking to create growth opportunities. And I think one of the interesting things about the Lakers is that if you kind of look at, what's in the headline today about capital going into sport outside of the core sports property, well, obviously from my prior world, infrastructure is a big thing. And in a deal this large, like, infrastructure would typically be a consideration, right? And so it does strike me that LA Live has been there for a long time. I don't know what's exactly possible around that venue. And so I think that's an interesting element here, is where the easiest way to point to, hey, we're going to create additional revenues and value adjacent to this thing is infrastructure. Well, that exists there. And they're essentially buying that at the current price. So if you're a fly on the wall and go on them on the whiteboard going, all right, here's our core revenues, here's already what's in place. Like, how do we drive value beyond this outside of just market growth or media rights growth? I'm really curious what they would say. This is in our control, and this is how we're going to drive additional value on top of this right now. I think that would be fun to understand.
For
Yeah,
our listeners, Kyle, and I don't know if you can share the story fully, but is your reference there aiming at at least giving it more attention to the ancillary businesses around the Lakers? For example, if we buy a second or third division club in Europe, us going out and buying the water bottle supplier for that specific venue, is that for, again, to paint a better picture for our listeners, what you're referencing here?
Yeah, I think that as you see the blend of traditional investor and entrepreneur come more to the surface, the mindset of how somebody underwrites a deal and them understanding the returns that can be derived from that are continuing to proliferate out from the core thing that is bringing them to the table. I've told this story a few times. I have a buddy who owns a basketball team in another country, and this is helpful to give this framing for a mindset. They were doing an annual expense review. They wanted to see if they could knock off any recurring expenses. And they noticed they were buying a bunch of water bottles. And, there's a lot of entrepreneurs would say, okay, let's put more water fountains and reusable bottles in the facility, and we won't have to have as many water bottles. They saw that as a business opportunity and said, let's go acquire a water bottle company and let's sell it to ourselves for 25% cheaper than we're currently paying. And then let's set up a contract with all the other teams in the league and continue to expand from there. So that's what they did. And at the end, 2 years later, the income or the value that they had created in the water bottle company exceeded their initial underwriting and return scenario for the overall basketball investment.
Wow.
And so it's more, but, in addition to a return orientation fiscally from an investment, if you believe in the quantum universe to an extent, it starts to just pull other things to the surface based on the influence you sit in. And it gives you a chance to go, okay, like we can think more creatively about how we put this other capital to use here that de-risk, in particular in Europe, our exposure to the sports property or the football team, but creates additional revenue streams for our syndication or our vehicle or us as a management company that we otherwise would not have access or exposure to. So those things from these guys' perspective with the Lakers would just be interesting to understand what they think they can do on top of it, if that is at all part of the strategy. Maybe it's just controlling an asset of that scale and the influence of it, and it's not going to zero, and it's a premium asset. And maybe it grows at 8, 10, 12% annually over time. And at that scale, that's a lot of money. So yeah, that's what I mean by that, Dom. And I think the American investor has had that mindset and it continues to grow. And I think American investors starting to look at Europe more are thinking through that lens now to maybe cure some of the risk association with, in particular, football clubs.
I want to pivot to Europe in 1 second because I want to get a bunch of perspectives from you as someone with boots on the ground out there. One quick thing to read. This was from Joe Pomps. He did a really good breakdown shortly after this whole deal surfaced. And here's one section that's pretty relevant to what we've just been talking about. He said, this is the highest price ever paid for a professional sports team, and it is also a significant premium to what these teams usually sell for. For context, even at $12 billion, Kushner and Iger are paying approximately 22 times revenue. Or in other words, the $2 billion increase in the Lakers' valuation since Walter's purchase, which, by the way, was closed in October of 2025, so 10 months ago officially, is equivalent to almost 12 years of the team's current annual operating income, meaning Kushner and Iger are paying Walter today for many years of anticipated appreciation, and Walter no longer has to wait for that growth to materialize. It will take a few days to figure out how this deal is structured, but I have several initial questions. For starters, how much of the team will Kushner and Iger actually own? Kushner has an investment fund that has raised billions of dollars to buy assets exactly like the Lakers. This is the Thrive Eternal Fund that I was talking about at the beginning. But NBA rules explicitly ban investment funds from owning more than 20% of a single team. Iger is also not a billionaire, with Forbes pegging his net worth closer to $700 million. So that likely means one, Kushner is putting up a large chunk of money, which is why early reports indicate he will serve as the team's governor. And two, Kushner and Iger are planning on raising significant outside capital, bringing on a dozen or so limited partners. There are two quick paragraphs after this. One thing that people are also speculating is that Josh Kushner's personal net worth is wildly underreported. Outside of that, there is also a question surrounding Jeannie Buss. When Buss initially agreed to sell the team to Walter, she got it in writing that she would remain the team's governor for at least 5 years. But now the team has changed hands again. He says, I have to imagine that agreement is no longer in place. And then there's Walter. If you have been following the news over the last few weeks, you have probably seen that a U.S. attorney's office in Manhattan and the SEC are investigating Walter and his companies for potential fraud. In simple terms, Walter is being accused of using one pocket of his financial empire to finance another pocket, while failing to disclose that both pockets were effectively controlled by him. In a way, given that he revised his books from $1 billion in loans to $16 billion in loans, Walter has already confessed to bad record keeping. That doesn't necessarily mean that Walter did anything wrong, and he still has not been charged with a specific crime, but that's why you are seeing people online say that he might have been forced to sell the Lakers quickly. So my guess, if I went back to what I said at the beginning with the smelling blood in the water, you have to imagine that Kushner and Iger called up Walter and were like, hey, we're sorry to hear that if what we're understanding is correct, you're in some deep, you know what, and this is not going to be good. And you know what happens when there are scandals and of this magnitude, and you're an owner across many leagues. We've had examples of this. You're probably going to get forced to sell the team. So how about we make this a lot easier for you? And by the way, this all started with a call on Sunday night, and the announcement was on Tuesday. Talk about moving with speed and no real formal process on that front. They clearly said, why don't we pay you this $2+ billion premium right now? Take this thing off your hands. You get a win. We get a win. Let's go. And I think that that was the ultimate example of when speed wins.
We'll get to Europe here in a second, but I know, Brent, I think either you sent it to me or another friend this week, but I want to tap into what do they call this? Gear acquisition syndrome.
Yeah,
yes, gear acquisition syndrome. So you sent this to me. This is essentially people getting the feeling that, people get the feeling of doing something by buying gear instead of actually doing it. And I thought that was really fascinating because we've been going back and forth on High Rocks for a couple weeks now, it seems. And obviously I guess I could get pegged as a High Rocks hater. I'm not by any means, but it's interesting to see these waves of certainly in the fitness and health and wellness space just come up out of nowhere and really cultivate these cult-like followings. And it's just people that have maybe never consistently worked out in their lives, suddenly, again, buying up all the gear, buying the energy goos, going to do the thing, if that makes sense. And I really want to understand how this is going to play into this asset class. And Brett, I don't know if you had any thoughts there, but I have to imagine that as the anti-AI asset class trade continues to flourish and thrive, no pun intended, over the next couple of decades, this cultural observation is only going to increase.
Yeah, I mean, that video is just a really concise breakdown of a lot of what we've spoken about, talking about brands like Bandit Running and Rafa for cyclers and all of these things where it's really smart marketing because you're not just selling, hey, this product is so much better. They don't even talk about that. There's no copy in these ads saying why this set of running shorts or these shoes or this, hat is like structurally better than just buying one from Nike or Adidas or Under Armour. They're instead completely appealing to identity, where it's just like, if somebody says, wait, why would I buy a $75 t-shirt to run in or a $95 t-shirt to run in? They'd say, well, aren't you a serious runner? Like, I thought you were leaning in and this is about to be your thing. Like, this is what it's for. It's just what the serious runners use. So like, you tell me. And it's like a template. And the guy in that video talks about everything from like, if you want to get into photography, you better buy this $4,000 camera as your step one. Or if you want to get into running, you better get all these things. You want to get into cycling, you better get all these things. And yeah, it comes back to identity and wanting to really not be known as a casual. And a ton of dollars get spent as a result of that when the marketing is so on point, communicating that.
Yeah, I think I finally also figured out the nerve that High Rocks sort of strikes in me a little bit, because I was having a conversation again at dinner last night with a friend that was, she's essentially 4 minutes off the Olympic qualifier for women in the marathon. And so just an absolute monster. I was running with her actually this morning, and I was talking to her about High Rocks and some of these other things, and she's just like so not about it. She's like, no, it's like not for me. I don't have to use Strava. Like I don't have to do these things. Like I just set the watch and send it. And I think the annoying thing a little bit is that where my worry becomes with things like this is that you do displace a subset of really elite athletes and people that ultimately never get recognized because they're not quote unquote serious about the cultural implications and fitting into that wave. So I think that's why it strikes a nerve a little bit, where I'm like, no, if you're showing up to a High Rocks event, it's because you paid the money and you showed up to a High Rocks event. It does not mean that you are, suddenly in a category above, other athletes per se. Clearly I'm sensitive about it. I don't know, Kyle, if you have any other personal stories or reflections about it. But
Yeah,
it's fascinating. It's fascinating.
Fiance is good friends with one of the founders of High Rocks, so we happen to be supporters of the brand. And I would say that, High Rocks kind of, and I'll back into the identity if you let me go down a rabbit hole for a second here.
Please.
Please send it.
Let me give you like the one thing that is interesting to me that I always find super just compelling is that the top 1 or 2% of the competitors across these various frameworks or platforms are like incredible athletes. Like at the end of the day, like the top of it, like I am so glad that the people that show up, whether that's CrossFit or High Rocks or, ultra marathoning, I'm glad that there is a place for these people to flourish and come to the surface rather than just running out there in the backcountry on their own and nobody ever hearing about it, because I'm inspired by human performance and doing things others haven't. So I do appreciate that about all of this. High Rocks here in Germany is very popular. Now the founders, or at least one founder, is German. And I have seen like after COVID, we all wanted to find ways to come back together and participate in group scenarios. You've seen that in sport. You've seen that in the resilience there from people coming to games and matches or whatever it may be. I think this is another place, like people have started until recently to step away from the church, for example. And the church for many people for a long time was this place of community and something that was there for them to show up no matter if they were perfect or not, because nobody is. But you had a full spectrum of people, but they all kind of convened around this faith. And I think in the 20 to 30 to maybe early 40 demographic in America, where a lot of that attrition in the church has been, that hasn't stopped people from wanting to find community and associate with and be a part of something. And then in America in particular, identity politics, or the idea of representing something or some group of people, is at a peak more than, at least in my lived experience or lifetime, than it's ever been. And so you have a society that's really focused on identifying as something. You have a society that is looking to be more communal and stepping away from what's been most common throughout history. Let's use the church as an example. And therefore you get these really, really interesting ecosystems that are naturally dopaminergic environments. Sports are more dopaminergic and anything else on earth outside of drugs, skydiving, those types of things. I guess you call that a sport. And so then you have this like invisible motivation that people are feeling to continue to pursue something, time, placement, personal best, whatever. And that's all kind of like mixed in a bowl right now. And there's people that are able to derive the value from those big causes. So I don't know that was very particular from a statement or my opinion, but I think it's interesting to process from a business perspective and a business model perspective that all those things are kind of affecting the world right now, and it's leading to new human behavior styles, this being one of them.
Yeah, it reminds me of some of the stuff that Dom's talked about is like, and you have the example of this woman who's not far from an Olympic qualifying time. People at that level, particularly with running, which is something that I just cannot relate to at all, she's in the best way probably kind of a psycho. Like that is like, that it like takes a certain type of profile and commitment and mentality. And it reminds me of like that barbell distribution, like midwit meme. I don't know if you guys have ever seen that, where they have obviously like the masses are in the middle and you have like the genius on one side and the, novice all the way on the other side, and they end up doing the same thing. So it's like the guy who wakes up and is like, well, I don't really know anything about running, but I think I want to get into it. I think I'm going to put on running shoes and go for a run. That's the same thing that like the extreme David Goggins type is doing. Like, I'm just going to get up and put on running shoes and go for a run. And then you have the center of this barbell, and it's like, I'm going to optimize and get my perfect sleep score. And then I'm going to check my Whoop. And then I'm going to do this, and I'm going to do this. I'm going to do this. I'm going to do this. And then you've done a 25-step routine and you haven't taken the first step of the run. But also it's not even like to hate on these brands at all. It's more just an observation of like, it's really smart marketing. It's tapping into the kind of, I guess, zeitgeist of what you just broke down. Like, people want to be a part of something. And if there's community being built around running or cycling or climbing or whatever the thing is, any sport related deal, I think that's great. So like, there's no hate on the concept, but that is really what's happening, where like, it's not surprising that downstream of those community and identity oriented practices, there's a whole commercial ecosystem trying to sell to those people, and doing so by tapping into the best thing that's going to make them buy. So it's you see it everywhere. Once you start to pay attention, it shows up everywhere.
Yeah, and I think it can also just manifest in really dangerous ways as well. I'm making a video on it, I think, as one of the top headlines of the year, and that is that Gen Z redirected money away from investing towards sports betting last year. Essentially, more than half of them, more than half of Gen Z redirected money away from investing towards sports betting in the last year. So that is, this survey basically looked at, if you're taking your paycheck on a weekly basis and the $200, $20 that you typically put into investing is going to sports betting, more than half. And that's a serious issue that I think is going to keep a lot of people, not just poor, even though it will, if I'm being honest with you. It's a very negative impact on your financial life, but it just keeps people on this wonderful rabbit wheel that we can now move. we just direct your attention anywhere we sort of want to. And man, if we need kind of more, I think you also see brands, right? So we're talking about, how does this play into the anti-AI trade? I think you're going to see brands that can win on the fact of that they almost rail against these sorts of cultural trends. Because then, if we think about it, sports betting a few years ago, in the sense that it is today, was kind of like top of the pyramid in terms of, you were probably a sophisticated quant, an incredibly dedicated fan, right? Sports betting was once a scarce resource for a lot of people. You had to go sit at the books in Vegas and
there was friction. There's
friction.
There's no friction anymore. Yeah,
exactly. And now we wonder why we do see these like odd individuals, especially in the Gen Z class, that are like, don't drink, don't sports bet, run with wired headphones. Like that is almost like the pedigree for like what the next alpha is going to look like. And then and then brands will be late to that, as they always are. And we're going to build classes around that, right? So it's this crazy shift that's always happening. But the consequence for it right now is that we have people throwing their lives away before they get started, which always scares me.
There was a headline in The Information 10 days ago. Robinhood now makes more revenue from predictions than from stock trades. It's on.
It's terrifying. It's terrifying.
Kyle, what is the sports gambling and I guess prediction markets that say they're not sports books? What does that landscape look and feel like inside of Europe?
Yeah, it's a good question. It's not very top of mind to something that I'm exposed to on a day-to-day basis. Now, I think generally in Europe, you're just advertised to fivefold less than you are in the US. I mean, everywhere you turn in the US, there's advertisement. For example, you're not going to drive down the Autobahn and see a billboard at all. And there's a lot of strict limitations to the types of companies that can advertise, right? You're not going to see pharmaceutical companies advertising over here. So I think it's just like a different environment completely. I think that advertisement has been a huge part, obviously, of sports betting's success. Creative advertising that catches people's attention, word of mouth. I would say that listen, there's people betting over here. I mean, you certainly can. I'll walk 10 minutes from where I'm sitting right now, and I can walk straight into, they call it a spiel arena. So like a play arena, but it's basically, you can go in there and place a bet. Typically when the doors open, I'm seeing horse racing or football or motorsport on the screen, but it's like smoky, and I would never walk into one of those places. It's got a different sense. Now, I'm not a gambler after an experience 15 years ago. And so I'm not a good indication of what's more widely taking place over here. You do see some advertisement on football digital billboards, whether it's Bet365 or other things. So that there's a presence, but it is nowhere near our experience in the US at all. So I would say it's widely not, like, generally in Germany in particular, the government, people who are regulators, the legal system, in addition to their thought around what's going to like create a secure and safe society and these types of things, they very much think about how is what we regulate going to influence the human brain and the health of it and the overall human being. And so if they believe that there's something that they're going to pass a law on, it's very strange because like nudity and brothels and these things exist here, right? Wide open. So quite an interesting dynamic there. But I just think the overall population is much more sensitive to sports betting because of, the detriment it can bring to people's lives, the addictive nature of it. You want to talk about a dopamine rush, so yeah, way less, I would say relevant or commercialized at a minimum.
I listened to a podcast with, it's called Business of Sport, and it's actually Harry Stebbings' brother, who Harry's got this 20 VC podcast that's wildly popular. And they're based in London, so a lot of what they talk about is not the NFL. In fact, they said that this guest that they had on, who is the head of the NFL's Europe and APAC group, he's the former CEO of World Rugby. He came on the podcast just a couple days ago. You saw it? Okay. And they were like, this is the first, they've done 145 episodes or something like, this is the first NFL interview we've done, which is so unbelievably foreign to an American. And I want to hear your thoughts on this interview because I thought there was a ton of interesting nuggets in there. One thing that was funny was in the comments, the disconnect between like the European mind and the American mind when it comes to American football, understandably being very different. the comments were like, I would never watch an American football game. It's just completely crowded with ads and it's just a giant marketing operation and it's so corporatized and, a lot of grumbling about the commercial elements. And meanwhile, you're like, there is nothing that Americans love more than the NFL, despite its flaws. And no one is saying they're not going to tune in because they feel like it's over commercialized. Like that's not going to be the chief complaint anyway of an American fan. But I'm curious what you thought of that interview.
Yeah, it was a good interview. I'll give him credit. I thought he was pretty open. He felt super transparent. I felt like I was getting just what, a thought stream that he was willing to just show up and lay out. So
right off the bat, he said, frankly, I would have done a much better job as CEO of World Rugby if I had had this role at the NFL beforehand. He put that out right off the top.
Let me give you something that I think is less discoverable through this interview, but related to Europe and the NFL and maybe some of those comments based on the seat that I sit in. And, for context, I have a handful of friends over here that were former NFL players, born and raised in Germany, have been over, come back, that help provide me with context. And some of them are the Pat McAfee style guys of the NFL here in Europe as it relates to like the following and the style, et cetera. The NFL is the second most watched sport on television in Germany. When tickets go for sale for an NFL game here in Germany, you can go into the Ticketmaster waiting room and there's 300,000 people sitting in there waiting for these to go online and they're sold out in 2 minutes. Madrid or Spain is not exactly the same. They're going to continue to go into markets where it's not like what you're seeing probably in Germany, Austria, Poland is rising rapidly. And there is an NFL presence over here from a marketing perspective. In Berlin, the Indianapolis Colts have the rights. Other teams have the rights in different markets throughout the country. I think the NFL has done a very smart thing in allowing NFL franchises to acquire certain marketing rights markets here in Europe. They are active. There's offices here. This is going to expand into a global game. If we did the podcast in 15 years from now, let's just give a long runway. Like, I think we're going to be amazed at how we're articulating what the NFL is at that point. Because there is a massive desire for more of it. I went to the NFL game twice. I went to an NFL game twice last year, one in London and the one in London, you could tell that, this was the 50th time a game had been played there. People were interested, but, maybe a little less engaged in the game. And also, I think the Rams absolutely beat the dog shit out of the Jaguars in that game. It was a very boring game. When I was in Berlin, keep in mind that these soccer fans typically are watching 45 minutes straight, no advertisement. That's why the water break in the World Cup was so strange. But with that comes, outside of the supporter section, basically screaming and standing and screaming the entire time, there's no entertainment value beyond that, really, outside of like the opening of the match. A lot of my German friends who had never been to an NFL game, some of the people that I went with after that game were like, that was the most incredible 3 hours of a sports event that I've ever been to, because there was ample opportunity for in-stadium entertainment. The engagement with the crowd was way different than you would find in America or in football, soccer. And the NFL knows how, at the end of the day, to put on an incredible show. And so maybe my general statement is that it is massively popular over here, and I think that's only going to increase. The NFL is heavily, heavily focused on their expansion efforts and are starting to get very, very creative in how they expose different markets to specific brands within the league. And the quality of experience is second to none. And I think people over here really, really appreciate it, enjoy it. Whether or not they know what the hell's going on the field, maybe a different question. But, I've played American football over here in Europe, as I'll call it semi-professionally, but starting in 2009 with a couple of different stints across Germany, Poland, and Russia. And the type of fan that is showing up to those games, they're coming to get something different than what they would typically find in football. It's more, if there's a tailgate, this is a 5 or 6 hour event. The game is 3 hours and there's going to be entertainment in between. And there's not ultras running around with fire and other things, but there's an appetite for it, Brent and Dom. And I think that gives the opportunity for domestic American football to continue to grow here. It's got to get capitalized the right way. And you saw London make an announcement of a team yesterday. They're going to play at Leyton Orient's facility, David Gamler's club. So it's growing. There's an effort around it. And I think he did a great job of letting people know that the league has conviction and is serious about expansion.
I literally talked to David yesterday. That's funny timing. It's so interesting what he's putting together. On this 2026 international slate for the NFL is a now record-breaking 9 games will be played outside of the U.S. There's a game in Melbourne, Rio de Janeiro, London, Paris, Madrid, Munich, and Mexico City. You just kind of teased it. Who is the Pat McAfee of Europe?
I think it's a combination of two guys, which are Bjorn Werner, former All-American at Florida State and a first-round pick to the Colts, who's extremely funny. And my former coach, actually, over here, Patrick Azume, they have been, the mouthpiece for the NFL and American football here for probably 7 years now in a super meaningful way. They basically host big events around the NFL games, and they'll fill up theaters of 8,000 people to listen to a podcast, to give you a little bit of the sense. And they're very, very collaborative, in addition to guys like Justin Peus, who's working heavily on American football over here. I think he has the right mindset and framework for how the NFL can be additive to the next generation of the sport. But yeah, those are Bjorn Werner and Patrick Azume. Football Bromance is their platform, are very entertaining. They understand how to explain the game through comedy to the fans, and they have no shame, and it plays well.
I think you mentioned one of those guys when we spoke back in November on Under the Number, and you were just saying, like, it cannot be overstated how much an individual has done for the growth of fandom and awareness of American football on the continent of Europe.
Social media, Brent, social media. Like, if you want to think of 15 years out in the connectivity globally, I came over in 2009. Twitter was just coming out. Facebook had been around for 4 years. Like, people knew of the NFL, but it was all based on the context from NFL Europe. And some people, had some type of system or way to watch games 7 to 17 years ago. Obviously, that has massively changed today from a information perspective, from a social perspective. And it's created an environment for these leagues to scale that just purely did not exist before the evolution of technology. And I don't know what that's going to look like in 15 years, but I think there's going to be another leap in consumption and access that will be meaningful. Just make this last comment before we wrap. The beautiful thing about sport in this asset class is, number one, it's not massively complicated. First and foremost, if you like, it can be in its nuance, don't get me wrong, but as a core business model, there's like 7 core revenue verticals and typically the same expense lines. It's your ability to be entrepreneurial around that within an asset, and creative and strategic and all these things that we believe exist in most of these sports properties that in fact don't, which is in particular in Europe. Which is why I'm very bullish on the future of Europe, because you have 100-year institutions that are likely not going to zero, even with promotion and relegation in place in soccer. And you have an IP that has been stable and resilient over this long period of time, which gives you this moment to go and like, holy shit, that's hard to recreate. We can't recreate that thing. But if done the right way, if thought about the right way, if respect is paid to where it came from, you can create value for the future. And that's a weird dynamic in the world where I was focusing on the USL, and you're trying to build like from scratch out of nowhere, trying to activate a market. You're trying to get people behind. You're trying to sell all this stuff. And so I almost think of it like the restaurant world. When I was opening a new restaurant, you got to select a site. Well, do I want to pay a lot more, or do I want to take on a lot more risk going into a new location that's this beautiful, pristine white walls? You got to put the plumbing in. You got to do everything from scratch. Or do I want to go into a second generation type of opportunity where the other business has moved out and there's some core fundamentals of Streamworks that are already there that don't cost me a lot to build and invest in up front, but that I can build on top of? And you really got to go, okay, is it the right market? Is there upside for value creation here? If not, you don't do it. But that second generation store is what you really want to get, because it's, $400,000 in the world that I was in cheaper. And you generally had a very good sense of the history of traffic count and everything else, which I think you can just apply over into European properties that have been here forever. There's a lot of data to go off of. If you're launching a USL team in a new market, typically secondary, like there's a lot of unknowns and there's a lot of capital that has to be spent to figure out if it can go. So that's probably an interesting element of how I'm processing the European market today with what exists over here and what's possible in the future.
Well said. Fellas, I got to jump, but Kyle, thank you for being a friend of the pod. Thanks for jumping in. We'll certainly have you on again down the road. No question about that.
Thanks Kyle.
Appreciate the sandbox to play in today. You guys have a good weekend.
Likewise. Go enjoy. See ya.
Yeah.